Good morning, ladies and gentlemen. Welcome to video conference of SYN to discussion of the results of the first trimester of 2024. This video conference is being taped and the replay can be accessed in the site of the company RI. And the presentation is also available for download. We inform that all participants are only watching this video conference during the presentation. Following, we will have the session of Q&A, where instructions will be delivered. And before continuing, the declarations here have a basis of suppositions of the administration of seeing information. Present ones are available, and these declarations can be involve risks and uncertainties, and that we have to say that our future events, and this depends on circumstances that can or cannot occur. Investors, analysts, and journalists should take in considerations that these macroeconomic environment in this segment and other factors can make that the results be materially different of those expressed in these declarations. We are present in this video conference, Mr. Thiago Muramatsu, Director President of SYN, and Mr. Hector Leo, Financial Director and Relations with Investors. Now I would like to give the word to Thiago Muramatsu that will give the beginning of the presentation. You can begin, Thiago. Good morning, all. Thank you very much who's accompanying our results of the first trimesters. And this is taped, of course. And I think that's beginning in this opening in the performances and the financial issues of the first trimester. I would just like to give everyone an update of the operation that we are doing with XP. And we have advanced a lot. And one of the main conditions for us to advance with this transaction is the captures of resources through the emission of new quotas of XP has done recently, and this was concluded with very success, 1 billion in this emission, and this is an important phase that we had to go through to finalize this. Now we continue in the phases complementary of diligence and negotiations with the contract. Everything is going well, but we still don't have novelties in relation of this subject. And the trimester was a good trimester operationally for our buildings and also for our malls. And we also, at the end of last year, we delivered the warehouse and we see some revenue in the area of logistics. And so with this, we are going to open and speak about our operational performance in relation of occupation, physical and financial of our portfolio. We did not have big changes of what was in the first trimester of 2023. It's important in 22, but in 23, it's more or less same level. The only novelty is that we consider these warehouses obviously an occupation that is lower because it was just delivered. It's in the phase of leasing. And so in the warehouse, we have more or less half of it leased, but we have had a lot of people that are interested, and we are going to see a good evolution in the vacancy, in the evolution of this venture. In relation to the occupation, financial occupation, we have an impact that is less the vacancy of the warehouses. Even though it's a big area, it has a rent that is lower in the segment of businesses and shopping centers. And going into this detail of the occupation of the malls, we maintained ourselves stable physically and it dropped a little financially, but it was a small drop. But what's important half of the month of May, we saw that April was a good month for us in commercialization. So we had a lot of leases and less than we presented, like a month that is very positive to commercialize the shopping. So we believe in the next trimester, we're going to see an evolution that is very good in these numbers. In the sales, it was one of the items that we had an evolution that is very important. We grew in total sales almost 11%. And with this 7%, almost 8% was of the sale of the stores. So when we look at the evolution of what we have in our portfolio, it is important evolution of in terms of inflation. And also we had good substitutions in the stores during this period, and we grew almost 2% in relation to what had been practiced in the previous leases. And we developed very much the area, especially of events and media, in a way of attracting the public for our ventures. And this was a growth of the sales of 1%. When we look at the leases, we have a growth that is above what was in the third and fourth trimester of 2023. In the last two trimesters, we grew almost 6% against 3 and 4.4 in the third three. And this is also a reflex, obviously, of the evolution of the sales. And now, in the part of the performance, Hector is going to speak now. Good morning, all. Following the operational results of the ventures, we concluded the trimester with 50,900,000 of result operational of the assets. This is a growth of 7% of previous year, breaking the classes. Start with malls. We had a growth of 4.4% and concluding 40,900,000 of million in this trimester. The result should have been 2 digits if it won't be the TPDV. And here, this is an effect of accounted of last year, mainly of the not payment of the Americana stores. According to the policies, after a year, we have to consider this in the fiscal balance. And even this not payment that is equalized. This is a flow that was agreed with them of payment, but because of conservation, for legal actions. In offices, we had a growth of 18% and 90 million concluding, and mainly the main effect, the end of in discounts where we had found various ventures. So this is very pulverized, especially the building that had a positive impact and very relevant. Following of EBITDA, we had a growth of 15%, very expressive, concluding 50 million in the trimester, which is very explained by the operational performance of the ventures, of the projects, especially of offices. And the financial result, we had a good evolution, and also we also had a breakage of 19% in net, and this comes of various factors. The decrease of Selic, this 200 base points of last year. We also have a balance because of XP, because of the transaction. And also we have IPCA, which is in a lower level, and also impacts in our debts, one of our debts that we have in our balance. And so at the end of the day, we concluded of 28 point versus of expenditure of last year. Finally, at the end of the day, the bottom line, the profit of the trimester was 7,400,000, and also a debt and FFO and the generation of the cash flow, 50.5 million versus the break even of last year. This is a good evolution in operational part and also the management of the debt. We opened the debt of the company. We have, and we must highlight the decrease of the main cognate, which is the gross debt. We closed it twice, 4.4 times of the previous trimester. And here we have the main impact of this transaction of 300 million. We also, there's a disclaimer, with the account rule, there's a big probability to conclude the transaction and us be with less than 10% less in 5 malls where we are selling, and we needed to disconsolidate the cash flow of SPS and put assets available for sale, circulating assets. This value is 1.2 billion, the cost of these assets so we have a notion of how this would be in terms of profit before the rate taxes, and to be more precise. And the cash flow of these SPS is 68 million. So when we look at the patrimonial balance pro forma, there is a difference of this cash flow that is adjusted, and it is also net. We have to adjust it in the patrimonial issue in FFS, which are the contracts of our debts. We also had a drop that was expressive, and we concluded with 3 times 2% versus 4.5% the previous trimester. And remember, it's 7%. So this is also a slack that's very expressive. And that dishonor, and this is also the release is 1.4, and we concluded 5 times before the previous trimester. We can continue. Concluding, nothing changed from the last trimester. Our timeline of amortizations is pulverized in the following years, and we only have amortization for the next year of 200 millions. 239.56, 162.57, and the biggest amortization in the tower of payments only in 2028. In relation to the transaction, we didn't make the decision of how much or when are we going to prepay in these debts and the distribution of dividends. This is a doubt that a main doubt for all of us. But I think in the next trimester, we're going to have this defined, the strategy and also the allocation of yield and capital of the company. These are the financial results, and I have just ended. We will begin now the session of Q&A for investors and analysts. If you have any question, please pressure the button, lift your hand. If your question is answered, you can leave the line and lower your arm. If you want to have a written question, please digit your question in Q&A with your name and your company. Please wait till we have all the questions. First question from Mr. Reinaldo Francisco. He says, congratulations for the results. If it maintains the projections of 3 million annually, how is the situation in opening and amplifying the shopping? Good morning, Reinaldo. How are you? In terms of ITM, we continue with this projection, which is a cost that is IPTU and maintenance of some securities and condominium. But I think differently than the previous trimesters, we have had some demands that are interesting there. And so just to give the same destination or even demands that are different, there is an asset that we have worked a lot on and in the moment has generated some engagements. But looking conservatively, we consider these 3 million of annual cost ideal. About the second part of your question, the amplification of São Paulo, we have approval of the São Paulo mayor to do this, and now we are working in technical projects to start, and probably in the second semester of this year, this ideally. Thank you very much. Reminding you to ask questions, you just digit your question in Q&A located in the inferior of the screen, or apply, raise your hand. Mr. Eduardo Grangeiro is the next question. Is there a preview of acquisitions or disinvestment in the radar of 2024, 2025? Eduardo, hello. I think that we have acquisitions. No, but we have been studying acquisitions and also in disinvestment. We have been working with some options for the two parts, but I think this is the business as usual. We've always done acquisitions and investments during our life, and so we are going to continue this. But today we are focused in our time to conclude this transaction. Thank you very much. Reminding you to make questions, click the button, raise your hand. If your question is answered, you could leave the line and click lower your arm. Please, just a moment when we collect more questions. Just a moment, please. Not having any more questions, the session of Q&A ended. We'd like to give the Thiago Muramatz that he makes considerations, the final ones of this company. I think, as I said in the beginning, this trimester was a good operational trimester. The second trimester that we are going through has been showing us that it is very active in terms of leasing and sales of stores. And so we have an expectation that is positive for the second trimester of this year. And the good part of the energy, me and Hector especially, is now dedicated to conclude this transaction. And so in the next trimester, we will have more news. Thank you all very much and have a great day. Okay, video conference of SYN has just ended. We thank all for your participation and have a great day.